The federal bank today initiating over $1 trillion in federal stimulus, and Bitcoin, as you can see at this resistance area, we're going to be talking about Bitcoin's top and what confirmations to look for today, alongside with the stock market and a potential inverse head and shoulder pattern, which is extremely bullish, that's coming up for Bitcoin, and what the perfect entry is going to be. As we all know, that 200-week moving average entry is quite a bit away at this point, and we've now confirmed the potential bullish run of 2020 as we approach the Bitcoin halving in less than 10 days actually. But I want you guys to pay attention to this chart. As you can see here, we've of course came up to this resistance area right near that $9,500 area. But interestingly enough, when you go inside of this chart, you can see Bitcoin decided to stop short of this resistance level and has yet to hit that resistance. And what does that mean in a technical analysis point of view? Well, first and foremost, the trend is your friend, and it's something we've been talking about over the last few weeks. And of course, we're in a bullish trend when we look at the short and medium term right now. However, the risk to reward when it comes to longs is very low, knowing that we've got this overhead resistance. And I've got some interesting things to show you, because not only do we see this overhead resistance, but there's a possible hidden bearish divergence forming on the daily chart. But most importantly, what you need to realize is any asset has a destination. And before we're going to predict what the pullback for Bitcoin is going to be, we have to realize that right now, Bitcoin decided not to hit its destination and to have a cup of coffee and sit on the sidelines on the bench for now. But of course, that will change here over the next few days as we start to see how the stock market is going to unfold. Because if you guys were paying attention today, we saw a last minute recovery operation for the stock markets and the major indices. So we're going to take a look at that. But I want you to realize that we're just going to take an unbiased point of view for Bitcoin, and I'm going to go and read the data for you. So first and foremost, realize that we have this 50-week moving average that we're currently above. Is that bullish? That's extremely bullish, especially because of the fact that we're above that 100 and 200-week moving average. And so knowing that we have a bullish potential here, what I want you to realize is when we look at the daily chart as well, we're above all three moving averages. So this is a very bullish case for Bitcoin, and it's very similar to what we're seeing with the tech sector in the traditional markets, because as you know, we're seeing these behemoths like Amazon and these top heavy ETFs outperform the majority of other subsectors like the transportations, which include Boeing, American Airlines, United Airlines, along with the financials like JP Morgan Chase, Bank of America. So we'll take a look at that, but realize that we're above all three moving averages here, and we've got this CME gap here at 11,750 that we need to come up and fill. Now the question is, are we going to head straight to 11,750 and fill that CME gap before seeing a pullback? Well, in my opinion, that may not be the case, because as you can see here, we've got this potential inverse head and shoulder forming. Yes, this is a very bullish pattern. You can see we decided to top out here at 10,500. We went ahead and topped out there again on February 14th. And then you can see we went ahead and formed this bottom here at that $3,900 level before seeing a lot of support where this left shoulder was formed here around December of 2019. And that could make us assume that if we see any pullback, that $6,400 to $6,700 level will most likely hold. And if that's the case, realize this: what that will say for Bitcoin is there's a very high chance that we come up and we potentially even test that $10,500 level. Could that be a wick? Will that be a body of a candle and closing right at that level? We don't know, but the point is we could certainly see price action go up to that $10,500 level, back to that neckline of the inverse head and shoulder, also allowing for Bitcoin to clear those shorts before we see a pullback, because as we all know, we're still in this global pandemic, right? I see we've got Buddy V, I Got Rats, Otol, and Dave Mills on our YouTube live stream. Good to have you guys. Make sure to like this video if you guys appreciate this content. I'm currently traveling right now. That's why you don't have the green screen, but I went ahead and made the webcam piece a little bit smaller just to ensure you guys have more of a view looking at this chart. But understand here that there's a high potential we come up to this level. Now, Would that make sense for Bitcoin looking at the macro bullish symmetrical triangle that's forming? Well, 100%, because guess what? If we come up to test that $9,500 to $9,600 level, that's going to be the clear short for everyone, right? Of course, we've got people with short orders. They might actually get filled and they might actually result in profit at that level, but there's a high chance, knowing Bitcoin and the fact that it's a $100 billion market, that we see an excess, as we saw here in July of 2019, where we actually go above that resistance level. And the reason I say that is, you can see the resistance really played a part the second test up. You can see that was the resistance area right there. And then over here, you can see that was the top of the December 2017 rally. So we're looking at that $20,000 rally factored into this technical analysis and this bullish symmetrical triangle that's forming. We know that 200-week moving average is a strong support, but we even saw this wick here, that second wick. You can see we saw an initial point of excess price action below this support level, but then we finally saw that wick fill itself at that support, then resulting in this bullish run up over the last few weeks towards that $9,000 level. And now we're above that 50-week moving average. We've yet to touch that resistance. So there's a high chance, once again, we see an excess push up to that $10,500 level. That goes ahead and completes this inverse head and shoulder. Remember, we have that CME gap right here at that $11,750 level that we want to fill, but may not fill just yet, because once again, there's a high chance we're going to see a pullback, not just in Bitcoin, but amongst all asset classes. And when I'm going to go through the stock technical analysis and looking at these major indices, it's going to be very interesting to see what's actually happening in the stock market, because you're going to see that there's a huge correlation to the possible prediction of Bitcoin and the major indices seeing one more leg up before the next leg down. And the reason I say the next leg down is because we're going to look at the financials and the transportation when we look at major indices, and those subsectors are really struggling right now. They're below all daily moving averages, and you need the transportation and the financials if you want a bullish stock market. And so just because the technology sector and the Qs are doing well, that doesn't mean we're back in a bullish trend. The stock market needs to have the financials and transportation follow. And if they stay in the coal mine, guess what? It's going to drag everything with it, including Bitcoin, because we know Bitcoin is also a volatile asset that likes to follow these major indices. So we have this bullish symmetrical triangle playing out. We have a potential inverse head and shoulder, which makes a lot of sense when we look at market structure, which is a huge factor in determining future price action. But then most importantly, I want you guys to realize that we've got this potential bearish divergence forming here. You can see with the RSI, we've got this initial top, but we've already formed a higher high in the RSI without a higher high in price action. And so realize this, at the end of the day, if Bitcoin is not able to break that $10,500 level, and for this bearish divergence, which is hidden right now, to fully take place, because you can see if we start to see price action to the upside, this is going to only see higher levels, and it's going to form another higher high, but that's going to be a bearish divergence if we don't surpass the price action of that $10,600, $650 level approximately. Of course, this is a Bitcoin Coinbase chart, but that can change amongst other exchanges minutely, of course. But realize that there's that potential hidden bearish divergence forming. And realize this with altcoins. We talked about altcoins getting murdered over the next few days. On Friday, you can see Bitcoin dominance went ahead and followed our pattern towards that 200-day moving average, and we saw a lot of altcoins take brutal hits. Of course, for those of you in our Discord group, we had a lot of shorts, a lot of targets hit with those shorts. But now we may see an altcoin cycle push us to the upside, because once again, the altcoins like to come up when Bitcoin consolidates. And if we go to a 4-hour chart, I'll actually show you guys my personal chart here. You can see here with Bitcoin in this zone between that $8,700 and $9,100 level, it's currently consolidating, and there's a high chance we start to see altcoins see some price action and momentum to the upside. But for those of you margin trading, and we're going to get into the major indices right now, and I've got this really cool analysis to show you guys, so stay tuned. We're going to be looking at Bitcoin spent outputs as well as the active supply, because it hit a 3-year low, and I'm going to talk about why both of those indicators are showing, number one, that we're about to top, or number two, we've already topped. And so we're going to look at that in just a second, but I want you to realize, for those of you margin trading, I'm going to take a quick second and talk about where I'm looking for shorts and longs right now. Of course, in this range, this is called the fool's play range. This is where the fools get in long and short. They exit their positions at break even, at a stop loss, with a minor gain, a minor loss. But we want to have those really nice, juicy entries, right? And so what I'm looking for right now is anytime I'm going to go long, I'm going to wait for another lower or a higher low or even a lower high form below that $8,700 level based on price action. I'd love to get that $8,400 long entry if I'm going to be entering a margin position. But for the shorts, you have to be careful because remember, shorts, there's unlimited downside, but with longs, there's a limited amount of downside. So anytime you go short, it's not just for Bitcoin, any asset, you have unlimited downside versus going long where you have a limited amount of downside. Or I'm sorry, the shorts have unlimited amount of downside. So what that means is anytime you take a short with any asset, you're risking a lot. That's why we saw with Tesla, for example. So many people shorting Tesla, and then it shoots near $1,000 per share, right? All those shorts got cleared out, lots of money lost. But that's why shorting any market, any asset is a sacred skill, and it has to be taken precautiously. But realize when it comes to longs, I wouldn't be afraid to have a Bitcoin long entry around that $8,400 level because that's this resistance area. And of course, if we look at that daily chart, you can see we've got these moving averages here at that $8,000 level to hold us for support just in case we need it. But I don't believe we'll see a push down to those moving averages before we see the next potential push up, because that would give bears a likely scenario to take control of price. But of course, forming lower lows is highly probable, but it's all going to be based upon what happens with the traditional markets. And that's why what I'm going to show you right now is extremely important. And then we'll go into those spent outputs and the active supply of Bitcoin hitting a 3-year low. And I'm going to talk about why it's showing that, number one, we've either already topped, or number two, we're about to top. But this is more important than that. Realize that the total assets of major central banks today, we saw a huge influx in quantitative easing for the Feds. You can see here, we went from around that $5.5 trillion level all the way up above $6.5 trillion right now on the Fed's balance sheet. Now, understand, a lot of people were expecting the stock market to dip today. And if you guys were watching the markets, it was looking like we were going down. And out of nowhere, we saw a last-minute recovery operation. Could this have been the Feds? Who knows? Once again, I've said this multiple times in the past, don't fight the Feds. Of course, we know the economy is yet to explore the ramifications from this global pandemic, and therefore we're very uncertain at what the downside is right now. But realize that at this point, we're seeing a lot of quantitative easing, a lot of liquidity being printed and pushed into these markets. They just announced today, the Feds, they're going to start buying up corporate bonds, corporate debt. So realize that with that money being printed, of course, they're not directly purchasing assets like ETFs for technology or whatever that might be, but realize that there's always those back doors and the liquidity will eventually get into the markets. And that could have very well have been the reason we saw a recovery operation in the traditional market. So realize the Fed's balance sheet seeing over $1 trillion in additional stimulus over the last 24 hours, and they announced that they're going to start buying up more here throughout the beginning of May. So remember, don't fight the Feds. We're in a bullish trend. Bitcoin, it's going to follow the traditional markets. It's been following the traditional markets. We want it to follow gold, but it hasn't been following gold. So realize that as the Feds print more money and they prop up the equity markets, there's a high chance Bitcoin gets propped up alongside with it. Of course, today we saw a huge recovery with the traditional markets and equity markets, but Bitcoin did not follow. And I'm going to talk about why. So realize this, when we look at the Dow Jones Industrial, you can see here, I talked about us seeing possible downside on Sunday or Monday, either pre-market, after hours, whatever it was going to be, but I was expecting a recovery. I was expecting a reversal, and it was because we saw the Russell 2000 finding support and closing on Friday above that 50-day moving average. So you can see when we look at the Dow Jones Industrial right now, we found support at that 50-day moving average, and interestingly enough, you can see here that was right around that $23,357 area. But when we go in a 4-hour chart, you don't even see that the market went down to that level. And I'll tell you why. It's because they love to fill their gaps, right? It's the shenanigans that they love to play on us Main Street and retail investors. The price never even went down to that 50-day moving average, but on a daily chart, it shows that it did print there. Of course, that's the shenanigans they always like to play, but realize at the end of the day, what's showing here is that there's another destination for the equity markets, and it's most likely not going to be to the downside, but most likely towards the upside, possibly towards where we've got these converging moving averages here, that 100 and 200-day moving average, but we've yet to come to that point. And once again, as I've said before, until we know the destination, there's no reason to look ahead of that, right? So the point right now is with the traditional equity markets, when we look at this chart, which has a lot to do with where Bitcoin is going to head, we saw this initial wave up, wave down, push up, push down, push up, push down, and it looks like it wants to make one more move to the upside. And so it's just a matter of whether or not that's going to be towards these converging moving averages or not. And so realize that when we look at some of my favorite market leading indicators, we'll go ahead and pull up the Russell 2000 because that's how we actually predicted that we were going to see a reversal today in the equity markets. If you watched my video on Friday, I know I was a little bit tired. I was getting ready for my trip, but realize that we're back in action. We had an amazing stock trade today. If you guys took that, realize with the stock signals, we're shooting out all of these potential entries, and the ones that hit, the ones that don't, but the ones that hit are gonna be juicy because we're looking for those nice haircuts, those nice trims. And of course, we got a great one today. I think over 2% profits on that stock signal, and it was the only one that hit entry. But realize what we're seeing here right now is extremely important. So as you can see here with the Russell 2000, this encompasses the 2,000 smaller companies in the equity markets. This is the backbone. Initially, this was struggling as we saw technology such as Amazon seeing all-time highs, and we saw a huge burst in a lot of these tech companies, but the Russell 2000 was really struggling until we saw this major push to the upside on the 24th of April that took us above that 50-day moving average, and it was an amazing thing to see because this allowed us to assume that there was further potential upside for the equity markets, and I'm not surprised. I understand we're in this economic downturn, right? Dejong on YouTube says, speaking of haircuts, where did Naeem get his haircut? I got to get a haircut soon. I'm traveling. I'm on the road. Give me a break. But realize this. At the end of the day, I told you guys this months ago. The equity markets dropped way too much and way too fast in such a short amount of time that we were going to see a heavy recovery before any sort of downside. It's how markets work. They cycle, they ebb, and they flow. There's always a destination, and the point to look at right now is where's that next destination? In my opinion, there's a high chance we can head towards these moving averages, and if that's the case, guess what? Bitcoin has a high chance of seeing one more push to the upside before it pops out. And if it does it properly, we form that inverse head and shoulder that we were looking at. So looking at the Russell 2000, things look good. But remember, this is an unbiased perspective. I'm not going to play home team and say I'm bullish or bearish. I want you to realize that there are some bearish signs here. Look at the transportations, not looking so well. Boeing, United Airlines, American Airlines, right? Warren Buffett today, while the markets were open, was on live TV talking about how he sold all of his airline shares, right? All this bearish news, guess what? The market loves to do what everyone least expects it to do. So everyone's saying it's going down. Guess what? Even Warren Buffett, I've sold all my airline shares. Guess what? Market went up last minute today. Global economic stimulus and quantitative easing. Don't fight the feds. Realize at the end of the day, the markets will go up until they don't. And once they don't, we take a step back and we look at what the next destination is going to be. So the transportations aren't looking so good. We need the transportations if we're going to see an economic recovery. They're not looking so good. Breaking out of this bearish flag pattern that was forming here already below that 50-day moving average does not look good. So the question here is, are the transportations and are the financials going to drag the market down? You can see the financials also below that 50-day moving average. Not looking good. And guess what? The markets need these two subsectors to survive and to see a true economic recovery. If they're not going to happen, guess what? It's going to bring every other sector to the coal mine. And so realize the only sectors right now that are looking extremely bullish are obviously the Qs. Still above all three moving averages, as you can see, are above the 50, above the 100, and above the 200-day moving average. So tech looks great. Amazon, right? These are those companies doing extremely well. But is this the area where it's going to consolidate until we see the Russell 2000, for example, head towards the 100 and 200-day moving average, and then we see some of the major indices like the Dow or the S&P go to that 100 and 200-day moving average before we see the next leg down. Highly, highly probable. Understand this. I was looking at a chart from 1929 at the Great Depression and what happened in 1930, because remember, we saw that initial push down before we saw the recovery of around 37% in the markets, and then we saw another 90% drop, right? Guess what? When that happened, it actually topped out at the 200-day moving average. So in 1929, when we saw something very similar to what we're seeing right now with unemployment rates, with the global economic ramifications that the pandemic is holding against us right now, very similar to what happened in 1929, where in 4 years we went from a record unemployment of 3.1% to over 25%. Right now we're already over 20% in some cases. Of course, those are jobless claims. Once the economy starts to open up, things might change. But for now, we can assume an over 20% unemployment rate, very similar to how it was in the Great Depression. So when we look at how that chart topped out, it topped out at that 200-day moving average. Highly probable to happen right now for the major indices, as long, in my opinion, as long as the tech stays strong. And guess what? Interestingly enough, Bitcoin is a part of tech, right? You can assume it's a part of tech, right? It's like the digital version of gold, except instead of having physical gold bars, you've got physical coding that backs it, right? So realize that with Bitcoin, it's also above all of its moving averages, very similar to what's happening in the tech sector of the stock market. So for me to sit here and make an assumption, I could say this: well, maybe the tech and Bitcoin will stay above all of their moving averages until we really see the transportation and the financials come down, form another low, and then we see everything else dragged down with it towards the coal mines. Because guess what? For us to say we're going to see new all-time highs in the next 3 to 5 to 6 months in the equity markets, I think is very irrational, especially with big and prominent names like Ray Dalio and Mark Cuban saying we're staying cash, we're taking this to the side. Even Warren Buffett has yet to deploy all of his cash. Wouldn't you think if he saw a great economic opportunity at the recent bottom, he would have deployed cash? Of course, but he didn't. Keep that in mind. That's just another piece to the puzzle. I'm trying to be unbiased and give you all the data points, read them for you, and have you make an assumption about what you think about it. So realize at the end of the day, the tech is doing good. The other sub-tech sectors are not. And so when we look at the Dow, really what I'm looking for right now is the next resistance for the SPY. Of course, this is one of the most important charts to look for when we're watching equity markets. It's the S&P 500 here, encompasses those 500 Fortune 500 companies. Realize that the next resistance is going to be that $290 area. That's where we've got that gap here as well. So for us to head towards that 290 is where I'm expecting resistance. That could be a potential place to go ahead and sell off the gains that you've had from these lows, because as you guys know, we entered a lot of positions at these levels. We see another pullback and then maybe a push up. If we break right through 290, things could change. So I'm watching 290 when it comes to the SPY. I don't want to get too much into this because I have some really interesting charts to show you about Bitcoin and the active supply hitting a 3-year low. And the last time that happened was January 20th, 2020. And I'm going to talk about what happened to Bitcoin when that happened. But once again, I want you guys to realize that everything is going to fall under the umbrella of what happens to equity markets. And so don't fight the Feds. If they're going to put more money in, Bitcoin will follow. Bitcoin may go higher or it might consolidate at the highs. But we're watching these moving averages. And as long as tech stays above all 3 of those daily moving averages and Bitcoin, we can assume more bullish pressure in these other subsectors, even possibly with altcoins for the short term, of course. As we know, Bitcoin dominance has been on a tear up. So understand, with total hash rate doing exactly what we expected, you can see here, we expected that total hash rate to form somewhat of a cup and handle formation. You can see now we've broken out of that downtrend. We've finally formed this higher high. And of course, 10 days till the Bitcoin halving, this is very positive to see hash rate starting to increase. I can expect this to see a new high here very soon as we approach the halving. Doesn't surprise me. Once again, the supply gets cut in half in less than 10 days. Why not turn your miners on while the supply is here before it gets cut in half? So very interesting to see that. And then the fear and greed index still at 40, but we're in this level of fear that isn't like what we saw when we saw those initial big pushes down when it comes to the equity markets and Bitcoin that happened in March. Of course, Bitcoin bottoming out before the equity markets. So I'm expecting the fear and greed to kind of stay at a neutral level for now as people decide whether they want to be bearish or bullish. In my opinion, you want to be very careful at a time like this where there's so much uncertainty with the economic ramifications from this global pandemic. So very interesting to see that. Now, check this out. For those of you that stayed watching throughout this video, make sure to like the video if you guys appreciate this content. But I want to show you guys some amazing charts here. We'll take some questions from our YouTube and Twitter audience. I think we've also got Facebook on live right now. Grant Odell says tech will stay high while everyone is at home. Well, you can't say that because remember, Amazon even reporting below net revenue even after seeing this huge influx of gross revenue. Why? Because they had to make some adjustments for the corona. I'm not going to go and say the whole name here because I'm sure we've heard it enough, but they had to make some adjustments when it came to their security and their precautions when it comes to a sanitary point of view. So they had to really change some things up, and they ended up spending a lot of their profits, and they didn't necessarily turn out with the type of earnings per share that the investors were looking for. And so we saw that with its recent earnings call. So as much as we see traffic head towards these companies, they're still going to have a high output of expenses to deal with that traffic, especially as it was completely unexpected. And knowing that we can assume that if the overall economy takes a downturn, the financials and the transportation aren't able to catch up to the tech, then the tech will also be damaged by that and it will drag everything down. See, the tech can't just keep holding the financials and the transportation by their neck right now because that's what it's doing. If the transportation and the financials want to go down, they will. And guess what? It's going to drag the rest with it. There's no economy that survives without its transportation and its financials, right? So very important to watch that. And in my opinion, the tech is really holding things by the neck right now. So check this out. Bitcoin active supply, 1 week to 1 month chart here. It saw a brand new low, and it has not seen a low like this. This is a 3-year low. The last time it formed a 3-year low was on January 20th of 2020. And I'm going to show you guys a chart of Bitcoin here and show you what happened on January 20th of 2020. But we just saw an all-time low, and this is a 3-year all-time low for Bitcoin active supply. And the last time we saw that was on January 20th of 2020. Let's pull up a chart here and go to January 20th of 2020. So if we take this tool here and we look at where January 20th of 2020 was, it was right here. Realize that Bitcoin, similarly to how we are close to these moving averages, was just below that 200-day moving average on January 20th of 2020 when we saw the active supply hit a 3-year all-time low, and that just happened today too. This was close to the top here. Yes, we saw over, I would say if we were to compare this from the bottom here towards where that was, we're talking about a 36% upside before that occurred, and then we only saw about 19% more upside before we topped out with Bitcoin. So to me, that shows that there's a potential top coming here soon because this chart also formed a 3-year low on January 20th of 2020, the same way it did today. So a potential top in the foresight of Bitcoin. Now, check this out. Interestingly enough, we pull up this chart here. This is Bitcoin spent outputs for the last 6 months forming a new high. The last time this happened was February 11th of 2020. Let's go look at Bitcoin's chart on February 11th of 2020 here. So we pull up February 11th. Guess what? February 11th was right here at the top. So Bitcoin spent outputs 6-month high today, right? May 5th, 2020 also happened February 11th, 2020. It was a 6-month high in spent outputs. Guess what? It happened literally at the top of the market on February 12th before we saw the push below 10,000. So another potential puzzle piece for you guys to look at. About to top? Possibly, right? Now check this out. Even more interesting. We look at the spent outputs for the last year, right? So that was the spent outputs for the last 6 months hitting a new all-time high. Now this is the spent outputs for Bitcoin over the last year, also hitting a new high. But the last time this happened, when we look at a 1-year timeline, was June 19th, 2019. Now, guess what? We pull up a chart here. We go to June 19th, 2019, and guess what we see here? So let's pull up June, and this actually takes us all the way back to this area. So we pull up June 19th of 2019 right here. Guess what? About to top, right? Bitcoin was about to top June 19th right here in this area. I'm going to circle it again. Right there at where that top was. So remember our assumption. Yes, there's a possibility that we see further upside for Bitcoin. Why? Because number one, we've got that CME gap here at 11,750, but we've also got a potential inverse head and shoulder forming. So we've yet to come to that top. And realize this, Bitcoin decided not to reach the resistance. It decided to take a break, go to the sidelines, sit on the bench, and have a cup of coffee for some reason, right? Another puzzle piece for you guys to look at. It didn't want to go to that top. So 9,600, it's very, very likely we come here at least to test that. But just like we saw in the past, we even saw an excess above, right? And so is there a chance we see an excess above to clear the shorts, as we know tricksters and company like to do, to clear shorts out? Very possible. And guess what happens if that does occur? We potentially top out again at that $10,500 level. Not only did we top out there here on the 23rd of October, we topped out there on February 13th. And guess what? There's a high potential it could happen again. And if that does happen, and looking at the spent outputs and the active supply in those charts, there's a high probability that we're either at the top or about to top. And then guess what? We come to that $10,500 level. We see a pullback, most likely that $6,400 to $6,700 range. Why do we say that? Because remember, over the last 3 weeks, we saw Bitcoin show a strong consolidation at that $6,400 to $6,700 level. And so we know there's strong support there. And so is there a probability that Bitcoin pulls back to that region? Very likely. And guess what would trigger that? The equity markets finally topping out and then coming back down, following the financials and the transportation sectors, and then seeing a potential new low or a double bottom. And if Bitcoin decides to decouple with the traditional markets just as it did when we initially bottomed out. Remember, Bitcoin bottomed out on March 14th. The equity markets bottomed out on March 26th. Why was there a gap there if they've been correlating? Because guess what? Bitcoin at one point said to itself, you know what? At the end of the day, I've got this macro bullish symmetrical triangle that I'm in, and I am not willing to see any more downside. I'm only going to be willing to see a small excess push down below this support level. But at the end of the day, as we've seen this happen in the past, we've seen an excess of price action, either to clear shorts or clear longs. That happened here, and Bitcoin decoupled from the equity markets. Guess what the likely scenario would be this time around? Equity markets see another crash down. Bitcoin decides to follow initially, comes down to 6,400, forms the inverse head and shoulder. Equity markets continue to tank. Guess what? Bitcoin, not just a volatile asset, also a storage of value. By this time, the halving had already occurred. The mining supply gets cut in half. Fundamentals are there for Bitcoin. We've looked at the previous Bitcoin halvings and how price action have led up into the halving, and also how the price action was after the halving. And it's very likely that Bitcoin tops out before the halving, sees one more push down, and then guess what? Just to finalize this, and then we're going to get into the stock indices for tomorrow and look at future markets, and then we'll take some questions from our live audience. But guess what this all means for Bitcoin? We come up, we come down here, we almost come down to that this ascending support again, but guess what? That 6,400 holds, inverse head and shoulder forms, and we break out post Bitcoin halving, and we make this bullish reversal before bottoming out. Because guess what? If Bitcoin's price action comes back down to that $4,900, $5,000 area, bears have a chance of taking control. Bulls won't let that happen. It comes down, and then it reverses at that $6,400 mark. Highly probable, and we are looking at not just the technicals, but also the fundamentals to prove that. So how are the markets going to look tomorrow? Well, guess what? We talked about the major indices seeing a recovery last minute today. It was an operation that a lot of us were not expecting, except if you guys are subscribed to our YouTube channel. You guys know on Friday I talked about this happening. short amount of downside before we bounce from those moving averages, because the Russell 2000 was a leading indicator for the markets on Friday, and we saw it close above the 50-day moving average. And guess what? The Feds, $1 trillion pumped into the market today. You can see on their balance sheets, went from 5.5 trillion above 6.5 trillion. Oh, well, guess what? We also saw the stock market going from a potential new bottom to a recovery out of nowhere last minute. And so what does that mean? Don't fight the Feds. I've said that multiple times in the past. Don't fight the Feds. Over 230 points up right now after hours for the futures. Are we going to open positive tomorrow? Most likely. Is there a destination? Yes, there is. Have we reached that destination? Most likely not. So that's what I'm watching for the major markets. I'd love to hear you guys' questions and comments in the live stream before we wrap this up. But I appreciate you guys watching. For those of you guys that wanted the meat and potatoes, well, not the meat, but the juice and the potatoes, there you go. I hope you guys enjoyed it. Like the video if you guys appreciate it, and I'll take some questions and wrap this baby up. Michael Saraceno from Twitter says, I'm long tech on Apple, Google, Tesla, NVIDIA. Yeah, at the end of the day, when Elon Musk tweets that the share price of his company is too high and it goes up the next weekend, we know there's something going on in the markets, right? So I'm just being unbiased here, but in my opinion, there's a lot of ridiculous things happening right now in the traditional markets. We have to be very careful of that. So Trading Flop says, can we check the housing market? I have a buddy who works in title and mentioned a lot of families have refinanced but lost their jobs, so it's becoming whirlwind. We'll realize this with the financial markets, or the real estate market. I have a lot of friends that own millions and millions of dollars in real estate. Actually, one of my buddies, over $1 billion in assets in the real estate game. And when we look at the real estate market in 2008, when we saw the global recession, we didn't see the housing markets bottom out until 2010, 2011, 2012, right? So sometimes the housing markets are a leading indicator, but right now they're following, right? So realize at the end of the day, for the housing markets, we want to wait until we see a ton of short sales on the market, we see a ton of bank-owned properties and foreclosures, and that's when we want to start entering into the real estate, because at that point, we're seeing all these distressed assets, which become opportunities for those of you with liquidity and capital to go ahead and inject during the time of the assets being distressed and being foreclosed or being short sold. And so that's what we want to wait for the housing markets. It's following, it's not leading right now, and so we want to take a step back. Of course, I'm also looking at the housing markets. Eric says, buying Boeing right now, good or bad? I'd be very careful with the transportations, because guess what? They're not looking good. When we look at the overall subsectors here, we know the transportations are just not looking good. And so the transportations are what's holding the markets down right now. And at the end of the day, we need the transportation. So you can see below all moving averages, very different scenario than what we're seeing with the tech, right? So with the transportations, I'd be very careful, and the financials, be very careful, because a lot of them are extremely over leveraged. A lot of them are going to see a huge drop in demand. And so those are the ones that could potentially bring us into this next economic downturn. RM says, Boeing is a hard one to decide. Warren Buffett just pulled out of all of his airline investments from Berkshire Hathaway. The airlines won't be needing planes for a while. Very, very interesting. FU says, do you think BTC will go over 9,500 10K before the halving? Very hard to tell. I think a big part of that is going to have to do with how the equity markets are going to react over the next few days. We've got a full moon coming up May 7th. A lot of you guys study moon cycles and the effects on markets. That could be a potential reversal day. Who knows, right? Jay says, if Warren Buffett's selling airline stocks, you want to stay away from Boeing, especially they've yet to clear the max 8. So I appreciate you guys tuning in. If you guys want more of this, join our Discord. The link is in the description. Discord.gg/profits is the link. I appreciate you guys tuning in today, and I will be heading out and seeing you guys on the Discord. Remember, trade safely, be cautious. There's a potential top coming, or it's already happened, and we want to watch the equity markets over the next few days to see, is this really going to be a new destination towards these converging moving averages? And if so, that's a lot of potential upside, and that's a lot of potential upside for Bitcoin as well. So thank you guys for tuning in. I appreciate you guys. Eric says, what are your thoughts about oil ETFs? I think oil is a little bit of a different game right now. It's looking like it's wanting to start recovering. And of course, we know oil is a commodity that a lot of people can't live without. And so I like a lot of the bigger oil ETFs like VDE, for example, which is one of the Vanguard ETFs for oil and energy. But I would say that energy is a potential good play, I think, over the next few weeks if we start to see economies opening back up and the demand for oil coming back. I think that's definitely a good play there. Of course, it wasn't a few weeks ago, but it's definitely one of those that are lagging. But remember, if the transportation see a big decline, it could really affect oil as well. So realize that with Tesla and the batteries coming out, a lot of people are looking at the long term of oil and saying, okay, is this really going to be what we thought it was going to be decades ago? Most likely not, when we have a lot more efficient means of generating energy when it comes to solar, wind, even nuclear becoming a popular thing. And so understand that it's very, it's very much a commodity that may be going away here in terms of use case. Zane says, we broke structure, Naeem, losing some steam though. I'm not sure what structure you're talking about, but anyways, Jay says, take care, brother Naeem. Always great analysis. Thank you so much, guys, for tuning in. I will see you guys on Wednesday, and I hope you guys stay safe during this lockdown and the quarantines, and all of my blessings go out to all of you and your families. So thank you guys so much. As always, snipers